My name is Kris Jaenicke. I'm the Divisional Sales Director for the eastern half of the United States, and I also wholesale my own territory out of Ohio. You know, the investment landscape has changed dramatically in the last 10 or 12 years. In the 80s and the 90s, stock markets went straight up. Now they go straight up or straight down. And all the stock markets on the planet are highly correlated, meaning they're going in the same direction at the same time. There's no diversification among large cap, small cap growth and value. That's number one. Number two is that interest rates are so low, bonds are not able to generate much income for clients. And so you have a lot of people retiring, needing income, can't find it. Dramatically different. You know, if the markets have changed so dramatically, I think advisors have to change. And how do we change? I think we can learn something from the endowment model. That is to look at all the endowment funds and how they're investing. If you go back a dozen years ago, they were 60-40 stocks and bonds. Today, they have less than 30% in stocks. So they have half the exposure to stocks, and they have less than 10% in bonds today. It used to be 60-40, now it's like 30% and 8% in stocks and bonds. So they are looking outside of stocks and bonds and finding some low correlating assets, things that move in a different direction at a different time for a different reason than stocks and bonds. Low correlating assets are assets that you add to stocks and bonds that don't go in the same direction at the same time as stocks and bonds. It's really the heart or the core of modern portfolio theory, which says that you can put volatile asset A with volatile asset B. If they're highly correlated, that is going in the same direction at the same time, you have a very volatile portfolio. If they're low correlated, meaning they're not going in the same direction at the same time, what happens is you have smoother ride because you don't have to dig out of big holes if everything's highly correlated and you get a little market correction or a big market correction. So adding low correlating assets just means you get a smoother ride and overall better returns because you don't have to dig out of big holes. To learn more about LoCorr funds, call me. My cell phone number is 330-714-6903, or at the bottom of my email is a link that you can go to our website, which is www.LoCorrFundManagement.com.